Hello everyone, Maurice Singh here. Welcome to Tinks Invest, where we're going to be talking about investing, finance, and professional development. For today's videos, for entertainment purposes only, the stock that we're going to talk about today would be LUCID Motor, CCIV, Churchill Capital. As you know, across the board for the EV sector has been experiencing a lot of the sell-off in the last 2 quarters so far, ever since that pump that we saw in last year, Q3, Q4. And CCIV was originally a spec company that was acquired and merged with Churchill Corp, which is, as you know, investment vehicle that subsequently acquired a US-based company called LUCID Motor, which is an electric vehicle company on the high-end spectrum. Think of this like a more expensive Tesla, or like the Rolls-Royce of Tesla, if you may. I don't know if that's the right analogy. So I'm not really a car person. But with respect to the stock, it had pumped up basically ever since the beginning of like trading around the $9 level all the way to the $65 level, and then subsequently sold off because of all the macroeconomical and all the inflations and all the EV chip shortage type of macro exogenous factor that's been kind of pushing the stock down. And currently it's trading around like the $19 level, which I find that to be quite interesting for us to look at, knowing the fact that it's sold off so significantly by like 85% so far. So I'm going to go through a technical analysis to see where I see the stock going from here, and why do I think this is an interesting opportunity for us to look at right now in case you are thinking about getting some exposures in the EV industry. And obviously this is going to be a macroeconomical play going forward, and also with respect to why this is the company with the right business fundamental and the right supply and demand perspective and a psychological perspective looking at the chart. Also, I'm going to give you guys my price level to look out for and the year-end price target for 2021 as well. So stay tuned, stick around, and let's make some money. Alright, so take a look at that CCIV Churchill Capital Corp, or LUCID Motor. So look at the chart right now, looking on an annual perspective on a daily chart spectrum. You could see that ever since last year, we were basically trading sideways around like the $10 level when it was a spec, obviously. And most spec companies or special vehicle companies, that gets traded on the public exchange, typically starts around like the $9.90 or like the $10 level. So this was basically what was happening. That's why it was trading like this. And ever since the debut on the market, it pumped up immediately because of just the EV boom that was experiencing last year, with the whole euphoric pump that you could see so prominently in the chart here. And around this time of the year, early this year, a couple months ago more specifically, is that there was a rumor between the Saudi prince, one of the oil giants as well, in Dubai. There was a conference that was going on, or like a convention that was going on, that the Churchill Capital representative, one of the senior members of the team, went over there alongside with the CEO of LUCID Motor in discussions for a majority investments, about $1.7 billion of injections into this investment vehicle, which at the time was called Churchill Capital CCIV, that it will become a company called LUCID Motor, which again, right, is a EV vehicle based in the US, right? And because of this rumor, also on top of the the macro boom that Biden was proposing with respect to the green energy plan that he has in his administrative proposal, and also at the same time, because of the drag that we have seen from NIO stock and also from Tesla stock, seeing that Tesla pumped up all the way from like the bottom right before the split on the S&P 500, and the S&P 500 inclusion that pumped the stock from like the 350 level all the way to $900 level. So that also have some correlations to the drag, which you could see in the major green candle right here, right? So this green candle was not directly correlated to that pump. The green candle was correlated to the fact that this was basically ahead of the announcements for the official merger between Churchill Capital and LUCID Motor. And this was basically a euphoric pump. People basically were FOMOing to pump the stock all the way from there. And you could see that if you just look at this chart right here, I think historically, when we were trending according to line, this made sense in a more of a logical supply and demand perspective. But this pump was so out of the blue, and the outlier was so steep that the sell-off was just absolute immediate, right? Whatever goes up really fast comes down really fast, and you could see that the gap was formed, and it's exactly what happened. The pump went up, and then some consolidation here and there. I feel bad for people that actually bought at this level, the $65 level, and immediately sold off, right? And that's the difference of the time duration was durates, but in a couple of days, right? You could see that that's like less than a week or so, right? And ever since that sold off because of the merger announcement that came out. And I think at the same time there was some sort of a negative media affectations from CNBC talking about that the CEO was doing some sort of like fraudulent activities, or that he inflated or embellished some of the demand projection numbers that he was announcing to the public, that there was some misalignment there. That saw some sell off on top of the official announcements for the merger. That subsequently sold that off. So it's multiple negative catalysts on top of the EV chip shortage that also we're experiencing, and also a lot of the macroeconomical negative factors, with respect to inflation rates, with respect to the tax adjustments that Biden has, basically, is going to be squeezing us with respect to the capital gains tax across the U.S., and also for the corporate tax as well, which typically will hinder the margins across corporations and companies in the U.S. All of those negative factors, and I think I just named like 7 negative factors, subsequently made this major sell-off, right? And you could see that ever since then we crashed all the way down here, and you could see that we hit the bottom right here at on March 3rd, which was the March crash with respect to the Federal Reserve announcement that Jerome Powell has announced to us with respect to some of the activities with respect to monetary policies, with respect to the inflations, and some other exogenous factors that are gave a lot of fear and scare among public investors. And after that, we kind of bounced back up, on a more of a sideways fashion, but definitely on like a downward trend. You could see that we basically dropped like, off a parachute down to the bottom, and we've been kind of hovering ever since right now. But you could see that we have basically formed a bottom, and we're basically consolidated for quite some time now. And the consolidation has basically performed for the last 1 month so far. And you could see that the pump are basically driven by the CPI report that we get on every mid of the month. So basically right now we're just basically hovering like calm before the storm, if you may, that type of perspective. And the resistance level was formed is because that was basically the bottom that we formed back in the day, in January, or earlier this year. So the resistance level is definitely strong. We have this formed once, twice, 3 times right here. And what I see the stock going forward is that, look at the MACD right now, it is basically fusing together and is looking more on an uptrend at the moment, but because of the fact that it relatively newly crossed, and look at that historically speaking, you could see that the crossing between the 2 lines are relatively narrow. So that means it's going to further consolidate it, going up and down, up and down, up and down. So if you want to swing trade this, on whatever red day, just buy in and sell on the green day. I think that could be a pretty good money making proposition for you if you think about that in a more of a day trading perspective. But if you want to buy the stock for a long term perspective, right now RSI is definitely highly oversold right now, which makes sense. You could see that was a huge sell off, about like 80%, 100% even. That I think in the near term future, contingent on the EV sector, coming back alive again, and contingent on, obviously the business fundamentals, we hear more about like the supply and demand issues that we have in the EV sector, and more news about the customer demands for Lucid Motor as a company as a whole, because ultimately I don't think they have sold any cars yet. I think they have pre-revenue, but I don't know we have any like public perception with respect to how are people liking their cars, right? I think there's a huge fan base of Tesla because people actually like to drive the Tesla's cars and they enjoy their experience, right? But Lucid is a relatively new car model that people haven't really adopted yet, right? And at the same time, this is a relatively new technology, right? And they are relatively new in production at the same time, right? So maybe there might be some quality type of issues that might incur that we don't know. That might be an oversight on our part as investors, right? But despite all of that, I think the risk and reward ratio is pretty good in terms of the gains of 80%, but down maybe like 10-12% as like the worst. So I think right now, if you were to dollar cost average, would be a perfect time for you to buy in, knowing the fact that the bottom is very strong. Like we've basically tested the bottom 3-4 times now, and I think we should be hearing some positive news going forward as we see more about the productions, and I think that will be starting to have more coverage on on Churchill Capital or Lucid Motor going forward, and also as the economy coming back in, there's going to be another sector rotation going back to the EV stocks and the high growth stocks, and CCIV has been so volatile because it's at the highest growth level of stocks, right? And this is going to be in the perfect alley for you to make enormous gains from here. So I think right now, I think if you were to buy it now, I think that's a fair price. I think $17 or somewhere around like the $18 level is fair. I don't think we're gonna drop below this number because that's gonna be pretty pretty difficult for you to break through the triple walls that we form here, right? And long term wise, I foresee us to be going back up. Sometimes like in Q3, Q4, we should be going back to like the $30 level, and by next year we should be seeing more about the production levels, and we should see more about like the public perceptions of this, and knowing the fact that Lucid is gonna be competing against like Neo, Tesla, even Ford F-150, which I saw on CNBC. They debuted that new truck that is fully electrical. That this is going to be one of the key players in the US EV industry, right? So I think it's highly oversold, huge discount right now with very strong business fundamental and long-term growth potential going forward. So if you think about long-term investing, very good investments. I think you could 2-3x, even potentially 5x your money from here, which that wouldn't be surprising. Alright, so just to recap on all the numbers that we just talked about right now, I think currently at the $1950 level, that's a fair price for you to get in if you think about this in long term, right? I think long term this is going to grow in 2 to 3x at minimum. So 1950 is a very good upward reward versus downward risk ratio perspective. So I wouldn't be kind of freaking out if I was to buy at this level right now, thinking that it's going to drop even further. And if we go test the secondary resistance level, the 1750, I think that's a fair number that it will possibly get into, knowing the fact that we're kind of just hovering up and down right now. But the hovering in terms of like the value is not that steep. That 1750 would be a next level for you to dollar cost average and start building up your position even more, knowing the fact that the bottom is only going to be hitting at most bottom, right? Even if this completely crash, it will go down to like the $10. It wouldn't go below that. That 1750, that's a fair price for you to get into. And if we even break to the third wall, right, the next resistance level is going to be $15. I think the likelihood of us getting to $15 will be highly unlikely, knowing the fact that we've sold off so significantly already. I mean, obviously contingent on there's no fraudulent activities that's going on in Churchill Capital, contingent on no more negative media affectation that's going to be happening, and contingent on no more macroeconomical exogenous factors that bakes into this going forward, that $15 will be unlikely. I think that we'll give this maybe like a 15% of probability that we'll get there, but very unlikely, right? I think the likelihood of us getting to 1750, that's like a more of like a 75% likelihood. 1950, that's the current price right now. And with respect to the price target, I'm going to give this like $45 for year end 2021. I know that we went up all the way to like the $60 level, like close to even $70 level earlier this year, but it's going to take about double the time for us to get back there. So I don't think we will completely get there by the end of this year. I think we'll get like maybe 75% there, based on just how the trend is going, based on the timeline that is going, and based on how the macroeconomical factors are baking into this. That 45%, $45 is a conservative level. I could be wrong totally, but that's a likelihood of an upside from here. I don't foresee us to be staying at this level for any longer. For at least like not in the next 1 year. I think the likelihood of us like being below at this level for 1 year straight even though there's like in production already, they're pre-revenue, and there's going to be some positive media affectation that's going to be happening, knowing the fact that we have such a long time of negative news going on, that for it to be continuously negative, unlikely and just not logical at all. Hedge funds needs to make money at the same time, right? So they will do whatever it takes to manipulate, to go through that cycle that is going to be happening logically. So if you buy in at 1950 right now, that will give you 131% gains, 2.3 times your money, which is, not bad at all. Alright, so that's it for today with respect to Churchill Capital, CCIV, or Lucid Motor. Really appreciate you guys for dropping by. Please hit the like button, the subscribe button, also the notification bell. Please watch out for the next video. Thank you so much. Take care. Bye.